There are two massive problems contributing to the challenging Bay Area housing market right now. These aren't exactly new problems, but with them both happening not just simultaneously, but continuing for an extended period of time, it's definitely creating a real estate fatigue of sorts. Not just buyers and sellers, but also real estate agents trying to help their clients. And I know some of you watching will wonder, why not just wait out this crazy market? Well, life circumstances don't always make it possible to wait for housing, and there are also some other reasons to consider why buying or selling now makes a lot of sense. In this video, I'm going to dive deeper into these two issues and give you some suggestions for navigating this market if you're planning to buy or sell now. The two big problems we're seeing are the climbing home prices and the lack of inventory. The Bay Area is an expensive place to live, and that's nothing new. It has always been comparatively more expensive than almost anywhere in the country, except maybe New York and Hawaii. But even that's changed. And while the pandemic has made a handful of the most expensive areas of the Bay, like San Francisco and Silicon Valley, slightly more affordable as far as the rents go, home sale prices have exploded to new levels we haven't seen before. As the home prices skyrocketed, you might think that homes would be sitting on the market and not selling, but this couldn't be further from the truth. In fact, they've been selling faster than ever, with bidding wars driving up prices even higher. How is it even possible? Well, lack of inventory is one factor, coupled with low interest rates. While the media would have you believing that massive amounts of California homeowners are selling to cash out on their newfound equity to take advantage of the opportunity to relocate to lower cost of living states, the lack of inventory indicates that most homeowners are staying put, perhaps instead taking advantage of historically low interest rates and refinancing their homes for lower payments instead. This has created a situation where we have very low available inventory and more buyers looking to buy than there are homes available for sale. Why not wait? You might be wondering, why would anyone want to buy in this expensive, overinflated market? Why would they not just wait it out? Well, sometimes life circumstances don't afford the option of waiting out the market, especially when there's no guarantee on when it will level out. And an even bigger issue is if interest rates increase, they may not be able to afford the home that they want, even if the prices come down. You see, buyers are facing a financial balancing act right now where the price of the home is only part of the equation. So consider this. A buyer today looking to pay $1 million for a home with 20% down payment, and the interest rate as of this recording of this video is 3.254% for a 30-year mortgage, would have a monthly mortgage payment of $3,483 and some change. Let's say that they wait a year and home prices drop 10%. That's huge, right? So they're able to get a similar home for $900,000. That's $100,000 less. However, interest rates have increased and now they have to pay 1% more interest, so 4.254% on that loan. They put 20% down, $180,000, and they have a mortgage of $720,000, which is $80,000 less than if they had bought a year ago. Their mortgage payment is now $3,543 and some change. So $60 plus more than the payment they would have had at $1 million house a year ago. Is this a win for the buyer? Well, they saved $100,000 on the price, right? And they did get to keep $20,000 in the bank since they didn't have to put $200,000 towards a down payment. So that's a win, right? Well, not really. Most likely they spent $25,000 to $35,000 on rent for that year. So right there, the $20,000 they saved on the down payment was spent in rent and then some. So looking 30 years down the road, waiting a year to buy for $100,000 less, the total they paid for that house with interest would be $1,275,717, and add in the $30,000 they spent in rent, roughly. So it's really $1,305,000 and some change. If they had not waited and they had paid $100,000 more for the home, had not wasted $30,000 for rent that year, and took advantage of the lower interest rate, the total cost of the home after 30 years, including interest, would be $1,254,026. That means by paying more for the house now and not waiting, they would have saved $51,691. Over $50,000 saved by not waiting for the prices to drop. And this example right here is part of the reason buyers are not waiting for the market to crash or even level out, because they know that timing the market is a gamble, and time is money, especially when you're renting and you're paying your landlord's mortgage. So if you've been considering buying a home and you want to take advantage of the low interest rates, where do you begin? First of all, find a local agent to work with who understands how to navigate this market, who is creative and has the ability to think outside the box to not only find you the right home, but also give you the best chance at getting your offer accepted. If you aren't already working with a lender to get pre-approved, your agent should be able to provide you with a recommendation for a lender to work with. Be prepared to get all your financial documents in order and turned over to your lender. The more documents you have ready, the easier the process will be, and the further through the process your lender can get you. In this market, you want to at least get a pre-approval. That's the least, and not just pre-qualified. In this competitive buyer's market, going through the pre-underwriting may give you a small advantage when making offers. You're going to have to go through the steps anyway, so you might as well get it done ahead of time. Every little bit of advantage helps. To get pre-approved, you'll need to provide your lender with copies of your most recent federal and state tax returns for the past 2 years. If you are a W-2 wage earner, you'll need to provide 2 of your most recent pay stubs as well. If you're a self-employed, freelancer, independent contractor, sole proprietor, etc., you will also need your most recent year's profit and loss statement and 2 years of business financial records, including any 1099s you've received. If you have any income from real estate, such as rental property, you'll also need to document rental income, leases, current market value of the property if you will use that income to qualify for the loan you're applying for. You will also need to provide statements for all of your assets as well. Typically, the most recent 2 months of statements for every account with assets you are using to qualify for the mortgage. That means checking accounts, savings accounts, investment accounts, retirement accounts, IRAs, CDs, 401k statement, all of those. Be prepared to provide a list of all your monthly debts, as lenders need to accurately calculate your debt-to-income ratio. This will include student loans, car loans, boat loans, mortgages, credit cards, anything that you owe money on. Also list the name of your creditor, their address, phone number, and the account number, as well as your debt balance and the minimum monthly payment. Also provide any mortgages you have on properties you own, even if you'll be selling those to buy the new property. And make sure your lender knows if you intend to sell that property before you buy a new one. If you're currently renting, be sure to provide proof of rent payments for the past 12 months and include the contact information for your landlord. If you're divorced, get your divorce decree ready and any orders for child support and alimony payments. If you have ever filed a bankruptcy or had a foreclosure, ask your lender what documents they'll need and if enough time has passed for you to get back into a new mortgage. If your down payment is from a gift from a parent or relative, be sure to get a letter from the gifter indicating it is a gift and not a loan that you're expected to repay. And perhaps before you start gathering those documents, it's a good idea to pull your own credit report to see if there's anything negative on there that you can fix before you apply for your loan. If you're ready to start getting your documents in order, I've put a link in the description with my easy-to-follow PDF checklist that lists the most common documents that your lender will ask you for. Be sure to print it out and get those documents together. It'll make organizing those documents a little bit easier. I'm Maria Diora, your Bay Area real estate agent. If you're considering buying or selling your Bay Area home, I'm here to help you. Give me a call, send me a text, or shoot me an email, however you want to connect. All my contact information is in the description below. Also, don't forget to comment and subscribe and hit the notification bell so I can see you in the next video.